29.
Back with Market Sense, a stock that is doing relatively well today, has generally also done fairly well compared to even peers, is Mahindra & Mahindra Financial, 1.5% higher, albeit a bit off the highs of the day, but doing well generally. Ramesh Iyer, MD of M&M Financial Services, joins us right now on the show to speak about all that's happening within the company and the way ahead. Thanks so much for joining in, Ramesh. Post the monetary policy, do you expect any change in your cost of funds? And give us some color on how do you see the cost of funds and yields shaping up going ahead?
Yeah, I think, more than the borrowing cost coming down, I think it's more of sentiments is what I think. 25 basis point reduction possibly may not translate into too much of reduction in cost of borrowing. But yes, of course, one doesn't know if the banks were to take a view and then drop the rates. Not beyond a 25 basis point is what I can say would be the impact.
So to sum up, how do you see your margins for Q4 and possibly for the next following 12 months, that is FY14?
I mean, there's no pressure on margins per se because, the borrowing cost increase has substantially stopped at least the last 6 months or so. And, most of us are operating on certain lending rates to customer, which is also stabilized. So I don't think anymore on the fear of increasing borrowing costs is there going to be any compression on margin. So we don't see any impact to the margins coming through because of such changes. If at all anyone can only expect any drop in rate, and if it is not immediately translated into a customer rate, possibly there could be some saving, but otherwise we don't see any pressure on the margins.
Afternoon, Mr. Iyer. Now, given the slowdown that we're facing, can you give us some details on how you see the cash flows for your target customers and how the demand for credit has been in the sector that you operate in?
I mean, I've been saying it for quite some time, even though one does see some slowdown overall, but I think the rural market continues to hold on pretty well. And in fact, you would see almost all auto manufacturers are looking at the rural market even as their strategy for growth. And given, 645-50 branches that we have across the country, I think leveraging that, going deeper into the market, talking to customer in that villages is helping us grow. And I think we would continue to maintain our growth trajectory through various auto financing, tractor financing, and we are also, in a way, got into the second-hand vehicle financing about 18 months back, and we believe that that's one segment which will help us grow further. So I would like to kind of differentiate between the overall scenario that witnesses in terms of a little slowdown versus what exactly is, translated into the rural market, and our belief is that the rural market is holding on.
And what is the outlook on your credit over FY13 and 14 and some details on your segmental growth as well?
See, if you kind of look at our 9 months ended December, and already people were talking of even in the festival season, is there a slowdown, etc. And we have had a growth rate of upward of 20 to 25% happening even in the first 3 quarters. So I am not able to see, as I'm saying, the rural continues to offer growth story. We are not able to see major challenges around there. But also more importantly, we are not a single product company or a single state company. We are kind of widespread across the country. We are deep rooted into about 165,000 villages where we have our customers. And then we are now multi-product company. So I believe our growth story is going to be multi-geography, multi-product approach, which has been our approach for the last about 18 months plus and which has yielded great results for us. And going forward, that would continue to be our strategy. We'll open up more branches, going more deeper into the geography, and that will help us grow. And as I said, we are kind of a strong player as far as the auto products are concerned. We have got into all car segments that are offered to sale in that market. We have also got into small construction equipment, LMVs, LCVs, as well as second-hand vehicle financing. So if you kind of put across each of this, that is multi-geography approach, deep channel development through more branches, then kind of getting into all products that we are already in, I think all of this together is going to be our growth story. And as I said, the first 9 months are a reflection of this strategy.
You seem to be well capitalized, Ramesh. However, what would be your capital needs over FY14? Any capital raising exercises that you envisage over the next 12 months?
See, we just did our QIP in November. And when we raised capital then, we said we are sufficiently capitalized for at least next 18 months to 2 years of growth. And therefore, clearly F14 is not the year where we'll come back to the market for any capital raising. Currently, we have a very healthy capital adequacy of close to about 19.5%. And I think that should see us through at least for 2 years from now. 18 months to 2 years, I don't think we are talking of coming back to the market for raising fresh capital.
And just wondering, post the final guidelines on the banking licenses, could you update us on A, what the progress has been on the business plans, and B, under which entity would the application for bank licenses be for?
See, I must very honestly admit you that it's too premature to give any specific remark on the points that you raised. But yes, definitely it's a great opportunity, and this opportunity is being looked at from the group perspective. We're not yet saying from which entity and whatever. Clearly, Mahindra Group is looking at this opportunity with the kind of high governance, credential, well-run business model in the financial services sector for the last, 15 years. So I think, and our approach has always been to go deeper into the rural geography. Kind of, if you put all of this together, I think Mahindra as a group clearly is looking at this opportunity very, very seriously, and we think it's a great opportunity to really look at.
Okay, interesting perspective then. Thanks very much, Mr. Iyer, for taking time out and joining in with the overall view on the company. So lending rates has certainly stabilized, but you can expect a downtake in the borrowing costs going forward, up by close to 2% for M&M Financial.